Hello, everyone. I would like to take a time and explain you how to really read the trading plan we send every single week on the channel. The reason is many people, I believe they don't understand how to read it, so they don't get the maximum out of it, and they think that it's just uh, market analysis like you find on websites like FX Street and Forex Factory and Daily FX Economic Calendar and so on. So I will first explain you what it's about, how to read it, and how to trade it. Okay, so let's check the USD Swissy first. And also we want to bring the text, the relevant text of this currency pair we posted on the channel, I think a couple of weeks ago. So here is the text we set. As we explained in the previous week's analysis, the bearish engulfing candle formed on the weekly chart. So I'm telling you that it was a bearish engulfing candle on the weekly chart, and it was around the significant level of resistance that could fuel the selling pressure in the market. Now, what you need to understand here, guys, is that because I run a company and I'm a certified financial technical analyst, I cannot give you any kind of personal or financial advice here. Okay, so we have to understand I cannot come out and tell you, you can sell it and it's going to go down. No, or you can buy it and it's going to go upwards. Okay, I want you to get it right and understand that what we do here is extremely serious and powerful. So I continue. However, the price ended as an inside candle without evidence of the sellers taking over. Now, understand that because I don't put the weekly chart and I don't show the weekly candles, maybe it's a bit hard to get it from the first time. But yes, if you are a beginner trader, if you have some charting experience, it's very easy to understand it. But if you're a beginner trader, just go on the weekly chart and check it out. It's self-explanatory at the end. So we can interpret this as a sign of weakness, even temporarily. So from this one here, we understand that it was a bearish engulfing candle on the weekly chart. It was around resistance. Bearish engulfing, we know, I told you many times that it's the strongest and one of the most powerful reversal price action we can find in the market. So the price didn't quite follow through. It stayed as an inside candle, but the good thing is that it didn't make any higher high to change the bias of the bearish engulfing. So we said that this can be interpreted as a weakness, at least temporarily. Now, on this chart here, we plot the 50 period and the 200 period moving average, and we show that the price is congesting between these two moving averages. So the market is not trending, and that's the information we extract from the market. So, and also we want to trade what we see, not what we think. I'm not here to tell you my opinion on the market, and I don't trade my opinion. I'm here to tell you what I read based on market analysis, to write it down and create a trading plan around it. So what else we could use at this point? The RSI at the top and the stochastic at the bottom. So RSI and the stochastic, they are both the RSI and the stochastic show numbers under the middle lines, which is explained as market weakness, because we see that the bearish candles, they are longer at this point here than the bullish candles. So the stochastic and the RSI, they both force to move below their middle lines. Now, if the price decides to increase, so we have to give the two scenarios now. So if the price will increases, the first resistance, it's going to be this resistance here. And usually, because we do the analysis on the 4-hour time frame, it's going to be the previous week's high, the first resistance. Now, many people, they think, why to use the previous week's high and the previous week's low all the time? Simply because the market established the boundaries of the high and the low the previous week. So if we want to trade on the hourly time frames, 30-minute charts, or even on the 4-hour time frame, we have to know pretty much where was the bias from the previous week. So if the price increases, the first resistance area R1 will be the 0 point, the number anyhow you read here. If this level breaks now, and the price will make a higher high. So first, if the price will increase, we expect it to reach the R1 resistance. Now, if it penetrates and close above the R1 resistance, then we expect it to travel further, and the next area of resistance I find is significant. It's this one here, the R2. And where is it? On the other hand, if the price declines and moves lower, the first support area will be the S1, which is the previous week's low most of the times. And price, yep, this one here. That's a price area which is close to the 200 period moving average. We see that the 200 period is also right at this level, and the 200 period it moves based on the last 200 candles. So it's very slow moving average, and it's less likely to deviate a lot from its current position in the next 5 days. Okay, something insanely significant has to happen in the market to create such as volatility on the candles, and with the calculations to surpass, let's say, 40 or 50 average length of the previous days in order for the 200 moving average to deviate a lot from its current position. So this can act as support as well. Now, if the price will break that level, the S1, we expect it to travel all the way down, let's say, to the S2 level, okay, which is this another, it's a weekly low. So what I would like you guys to understand here, the way the price will travel around the levels, and at this point it's better if I also show you the way the price will travel. It might gonna be in a straight line, in a straight candle, might gonna be in a wavy pattern, and maybe it's gonna come to retest again the S1 level, and then to bounce and move to the upside. What you need to understand is that, okay, this is a trendless market, but we're gonna find another one. I think the gold was the other, exceptionally, it performed very well last week based on our analysis. So in this one here, you see, if the price is going to come here and get rejected, then we might going to look to take some positions and to go short, because we have this level as a significant area. I didn't give you this level here, I didn't give you this level there, I gave you this level here, and I'm not giving this level, that level, that level. We didn't even give this one here. We gave this one because that was a significant swing in the market, the turning point. Okay, let's check what happened after this. This is what we expected to happen. Okay, that was the plan. So what happened, it was this one here. So that was the level, yeah, and then that was the other one. You see, guys, I didn't give you that was, yep, this one here, and then we went down to this level. I didn't give you this level here, I didn't give you that level here. We went straight to the significant level. Okay, on the 4-hour time frame, we had this rejection at this point, and I think that was on the Tuesday. Is it on Tuesday? Yeah, on the Tuesday. So the market opened right here. Where is this candle? Yeah, and on Monday, during the New York trading session, so that's on Monday, the plan was like here. Now we are on the hourly time frame. Okay, so on Monday we saw this doji candle at the support we had marked as a significant support. So if you were around here, you should definitely consider to buy this candle here. Okay, then the next day, again, I think it was during the New York trading session. Let's check it out. Yeah, at 3 o'clock. So after the news reported in the US, the market falls break the R1 resistance we marked with this candle here. So that was a clear selling signal to take it. Okay, so guys, this is how we trade the plan. Now, I cannot I cannot tell you to, buy the support and sell the resistance. We teach the price action to take advantage of the price action, okay, when it occurs. So, or you could go on the 30-minute chart, on 15-minute chart, and find that was on the 30-minute. Then that was a bullish engulfing, the same candle with a long wick. That was a bullish engulfing. It was pretty much the same thing. Any time frame you want to trade lower than the 4-hour time frame, it's really good enough to take trades based on the levels. Okay, let's check the gold. Last week on the gold, let me bring the gold chart. So here is the gold analysis we posted. Last week, the price of gold rallied from the doji candle and declined once it entered into the bearish engulfing order block we expected, as we explained in the previous week's analysis. Now, I give you the summary of the previous week so we connect it to what's going on now. The weekly candle ended as an inside candle, so the weekly chart shows an inside candle within the context of an uptrend. So we do have an uptrend. On the 4-hour chart, the 20 period is above the 50 period, and that caused the bullish crossover. Both averages are above the 200 period, the slow moving average, which is also a bullish sign. Now, both the RSI and the stochastic oscillators are in an overbought condition, indicating a bullish market. The price created a swing high at point B, and using the Fibonacci retracement tool, we mark the 61.8%. And that's what we call the golden ratio. Now, if the price declines, now that's the scenario. We need to have two scenarios. First, we make it very clear that this market is in an uptrend, both on the weekly chart and the 4-hour chart. Now, if you want to go to the lower time frames and start selling it from this point, that's totally fine. It's nothing wrong with that. It just, every trader has a different trading style. What is my trading style? Is to take advantage of the trends from what I call them sweet spots, where there is a cluster of orders there, where there are some kind of moving averages and Fibonacci retracements level, where there are some kind of horizontal support if we are looking to buy, and some order blocks as well, bullish order blocks. So at this point here, we gave the Fibonacci 61.8%. The reason we marked only this Fibonacci and we didn't mark the 50% or the 50% or the 78.6% or 38 or 23, whatever are the other numbers, it's because there is a broken swing high, which we're going to use it as support. It was a resistance. If the price had been rejected here, that would have been resistance, and now it acts as support. We expect it actually to act as support. So the two scenarios is as follows. Let's continue. If the price declines, the first support area is the S1 around 2332. This is the level with a cluster of the S1 support, the 61.8%, and the dynamic moving averages. Okay, there are some moving averages here. Now, what you need to understand on how the market moves in general, there are bots, there are high frequency trading setups, there are 1 million different systematic programmed methodologies. They are all using mathematic formulas. They may be using the RSIs, they may be using the MACD, stochastic, they might be using the moving averages, the Fibonacci levels, everything that can be measured and be defined with a number on the chart. Once you understand this, you will find also the usage of the moving averages, the Fibonacci ratios, and everything. Okay, what it doesn't have that much of solid measure metric, it's the order blocks, because order blocks, they are blocks with orders. So there we want to use the order blocks primarily entry validation rather than anything else, and not as a trading methodology, as a standalone trading methodology. Okay, so if the price declines further and close under the S1, the next support level is around 2306, which shown with the S2 on the chart. This level is significant because there is a 4-hour bullish engulfing order block that formed there. On the other hand, if price moves upwards, the first resistance area is the previous week's high around 2378, and so on and so forth. So we know that we are in an uptrend, right? Even if we have an order block here, a bearish engulfing order block here, the reason I will have pointed on the chart is to show the significance of this level. It doesn't mean we're going to go and take trades on the counterparty of the trend, but the price is, if the price will retrace back to the support, that there is also Fibonacci number, there are also moving averages, and we're going to see some kind of reaction here, we're definitely going to look to take the trade. Now, if you're going to take the trade again on this 4-hour time frame, or on the hourly time frame, on the 30-minute chart, 5-minute chart, whatever, based on your entry, if you don't follow the price action and entry setups we give here at Market Mastery, that's totally fine. But as long as you are at the spot where there is high probability of the buy orders to be executed pretty much at the same time. So how that played out on the chart, so please don't pay attention to this one, because that's the analysis we do for this week. So we were right here. That was the high, and that was the S1 with a 61.8, and the price, let's zoom in a little bit. Okay, so the price traded all the way down, inside candle on the 4-hour, bullish engulfing, multiple rejections. You could trade this on any time frame. There were multiple entries on the 15-minute chart. Price made higher highs and higher lows. Also on the 4-hour chart itself, inside candle, bullish engulfing, you take this one. Bullish engulfing combination with a long lower wick, you could take that one. Another bullish engulfing here. This is how you trade the trading plan, guys. Now, if the price had closed under this one here, that bullish engulfing and that order block here with a bullish engulfing, if could hold the price above, then we definitely will be looking to execute the trade. And when we say that if the price the price is in an uptrend, if the price penetrates the previous week high and close above it, then we do expect it to rally to the other level. It means in a meaningful way as the market usually does. It retraces and moves upward, retraces and moves upward. Okay, and once that level broke, you see it acted as support and the price took advantage with this bullish engulfing and moved upward. What time this engulfing formed? So at 9 a.m. local time, so 7 a.m. UK time, this candle formed, so it was a tradable opportunity. Okay, and for the rest of the day on the lower time frames, there were multiples of entries here. Okay, so guys, you need to really put some effort and read the market analysis, because trust me, it's very, very unfair to have it and not trade it. Now, you're going to ask me, so Theo, everything you send out, it's going to be a winning trade? Absolutely not. But knowing how to read the market, as I told you many times in all these educational videos we posted on YouTube, or when we used to do the live market analysis every morning, and all the time I was commenting how we trade, where to enter, what we are looking for. So I believe it's very simple. If you still have questions, please feel free to contact me and I'm happy to help you. Okay. Thank you so much. And I hope you find it valuable. And of course, to start using and trading the trading plans. Thank you.